Whoa, buddy. Put that thing back in its holster. We haven't gone anywhere.
I don't understand.
Check out the MichaelDukesShow.com for information on how to get access to the podcast.
Welcome to the party, pal.
The Michael Dukes Show.
The greed and the entitlement is astounding to me.
What more could you want from a low-budget radio program?
This is a dumpster fire.
That was just BS.
It is time to get a new perspective.
We know just what you need, and we've got just the cure. Open wide and prepare for a steaming hot cup of freedom.
I just don't fathom it.
The Michael Dukes Show, streaming live across the world.
Oh, baby. Live around the world on the internet at michaeldukeshow.com and across the state of Alaska on this, your favorite radio station and or FM translator. Good morning, my friends, and welcome to the program. It is the Michael Dukes Show Tuesday edition as we kick off this new year and get things ready to rock and roll. We are rolling right into it. It's another beautiful day here in paradise, and we are ready to go. We've got Brad Keithley waiting in the wings for our first weekly top three here on the program. We're going to be getting into it with him from Alaskans for Sustainable Budgets. Got a bunch of headlines and everything else. Also, of course, big weather alerts for around the state. Anchorage and the Matsu, Kenai Peninsula, and more, all facing some heavy winds and snow. The Kenai Peninsula, we've got between 2 and 5 inches, again, expected today, both in northwest Kenai Peninsula, Skilac Lake, also down here on the south side of the Ketchimack Bay with, again, 4 to 9 inches. With winds gusting as high on the Ketchimack down here at 50 miles an hour. Up in Anchorage, heavy snow again, 4 to 9 inches as well as the Matanuska Valley, both the Matsu, the southern Susitna, and the central Susitna, all going on until about noon tomorrow. A lot more snow. Warmer in Fairbanks. Somebody just reported in the chat room that it's 4 below in North Pole, which is a big difference. That's a 45-degree swing here in just the last few days. So, it's winter, it's weather, it's Alaska. Welcome to it, baby. Welcome to it. All right. Well, let's get into it today. Again, Brad Keithley joining us in hour one. We'll be joined at the end of hour two by Chris Story, who will come in for our first positivity boost here of the year, our Uplift, which, we don't need near as much as we did at the end of the year, but definitely is always a good thing, especially once we've had a chance to talk to Brad and he's kind of given us some truth bombs there. We feel pretty good about it. Let's get into it, though, and get things started. Brad Keithley, Alaskans for Sustainable Budgets, our guest this morning as we kick things off. Good morning, Brad. How are you?
I'm doing great, Michael. I'm glad to know my role is the setup guy for Chris Story.
Yeah,
I can beat people down a little bit. So the Story's there to uplift them. It's a good. You got a good combination going here.
It's not as much as a beat down as it is just laying out some general truths that sometimes are hard to hear. Like we said, the truth hurts, and sometimes that's kind of where we're at. Brad, how was your New Year? First of all, I guess we'll get through that. How was your New Year? Did you get all the eggnog you could drink?
I got all the eggnog I could drink. And then at some point I got a kidney stone. So my New Year's has been in and out depending upon the stone's position in my intestine at any given point in time.
Oh man, that's unpleasant to the maximum, to say the least. So, well, we appreciate you coming in and joining us. We should just get things cranking here. So, of course, we are 14 days away from the start of the session, and lots of questions as to what we're going to be facing as far as nobody's talking about a crisis. There was a Bill Wilikowski and Loki Tobin opinion piece yesterday talking about how if just the governor had just given them their SB 113 and but there was no discussion on on deficits or anything else. And I mean, we can already see how things are lining up. But your number one here is the most important fiscal issue in front of the legislature this year. Let's get started.
So we're going to have a lot of discussions about fiscal issues during the course of the legislature. The governor still says that he's going to come up with a fiscal plan before the start of the legislature, and hope that the legislature addresses that during the course of the session. Individual legislators have said they're going to, make various proposals with respect to fiscal plans. So there's going to be a lot of fiscal issues going on to talk about. But before we get into the session, I wanted to highlight what I think is the most important long-term fiscal issue that's going to be in front of this session, and make sure that I sort of set that up and keep our eye on it as we're going along. It is the proposal by some in both the Senate and the House to merge the two permanent fund accounts into a single account. The proposal to take the earnings reserve and merge it into the permanent fund corpus and set those up as a one account, a proposed constitutional amendment. That constitutional amendment got a lot of hearings last session. It did not pass either. It did not get out of committee on either side, but it sets in both Senate Finance, the last committee, its only committee on the Senate side, and it sets in House Finance, the last committee before going to the floor on the House side. And the proposal is, we've talked about it a lot on the show. There's been op-eds about it. The proposal is to just merge the two accounts together, and then set constitutionally a 5% draw. That's what the percentage is in the proposals in the various bodies, to set constitutionally a 5% draw against that merged account going forward. Here's my problem with it, and I've got two problems with it. One is it sets Alaska up, creates a backdoor into the corpus, and sets up Alaska to start gradually draining the corpus. Now, people will tell you, oh no, it's to protect the corpus, but they're either lying or they just don't understand. The corpus, as it currently sets, is absolutely inviolate. The Constitution says you cannot spend from it. The Constitution says you cannot do anything with it other than grow it, other than invest it for returns. The only thing you can spend is the earnings reserve, the account that catches the earnings that comes off the permanent fund or the corpus as the investments mature. But what this would do is merge the two accounts together and allow a 5% draw against the merged balance. If you don't earn 5% a year, if you don't earn the amount that the amount in earnings per year to fund a 5% draw, you nevertheless can continue to draw 5%. Under the current system, you draw that amount from the earnings reserve. If you drain the earnings reserve, you're done. You can only thereafter, continue to draw whatever is in the earnings reserve, and it constrains you from getting at the corpus. The two account system constrains you from getting at the corpus. Maybe instead of 5%, you're only earning 3%, and so you can only draw 3%. Maybe you're earning 4%, you can only draw 4%, but it constrains you from spending more than the earnings. You can't go back into the corpus to make that difference between 5% and what you're actually earning. Merging the two accounts eliminates that constraint, so that you can continue to take 5% regardless of whether the earnings reserve, regardless of whether the permanent fund is generating 5% earnings or not.
Right.
The permanent fund has not been generating 5% returns, and so you can easily see a situation in which the legislature, if this constitutional provision passed and the two accounts were merged, you can easily see a situation in which they go back, they use that back door to go into the corpus and start taking additional amounts. The problem with that long term is that you're draining the corpus. You're essentially taxing future generations by reducing the corpus, reducing the earnings power that you have in order to supplement revenues coming into the current generation. And it's just a continuation of what we've seen since the early 2010s. First, we drained the SBR, then we drained the CBR. Now we're in the process of draining the PFD as a revenue source. And this would just be a continuation of opening up the corpus to start being drained. The second, so that's the huge problem.
I just want to
multi-generational problem.
I just want to make a quick point because I was having this conversation the other day during my vacation, unfortunately, but I was having this conversation with somebody when they were talking about that. And I said, this is not about protecting the corpus. This is about protecting the spend. That's really what this is about. I mean, it has nothing to do with, because the corpus, like you said, 100% untouchable at this point. This would make it touchable, and it's about protecting the spend. I'm sorry. Go ahead.
No, that's absolutely right, and it is. I mean, you see a lot of words that people are throwing out: protecting the corpus, modern investment strategy, all that sort of stuff. But at the end of the day, it is exactly that. They want to make sure they get their 5% out of the permanent fund, regardless of whether they have to go into the corpus to do it or not. The second thing this does is it eliminates the incentive for the permanent fund board to do a good job. So right now, the legislature looks at the permanent fund and says, you need to be producing 5%. That's what the POMV draw is. And if you don't produce 5% in earnings, then the earnings reserve is not filling up at the rate it needs to be able to continue to take the 5%. So you've got the legislature looking over the permanent fund board's shoulder saying, you guys need to do your job. You need to maximize returns in order to make sure that we have enough in the earnings reserve to fund the 5% POMV draw. It creates a huge incentive for the permanent fund board. Not that they've felt it much yet. We'll talk about that in the last segment, but it creates a huge incentive for the permanent fund board to do its job. If the legislature can draw the 5% without regard to whether or not the permanent fund is actually earning 5%, it reduces the incentive. I mean, the permanent fund board will sit there and say, "Oh, we got an incentive to maximize," but you don't really. I mean, the legislature is going to take 5%. Is going to get 5% regardless of whether you maximize your returns or not. And so it encourages it de-incentivizes the permanent fund board focusing on maximizing returns and incentivizes them to just sort of sit around and claim the per diem or whatever they get without really focusing on maximizing returns. And we've seen sort of a cover your ass type approach to investments being made by the permanent fund board. Oh, we just don't want things to go down. We don't want to take any risk. So, we're fine with very low returns as long as we don't take any risk. We've seen what that sort of does to the permanent fund board. And I'm concerned that if we pass this constitutional amendment, successive permanent fund boards would not have the incentive to continue to grow. So the reason this is the number one issue to me is it's a long-lasting issue. Whatever Governor Dunleavy proposes in his fiscal plan, we'll debate, we'll decide, but it can be changed next year. Whatever Governor Dunleavy, whatever the legislature, proposes for a fiscal plan, we'll debate, we'll decide, but it can be changed next year. This thing can't be. What they're proposing is a constitutional amendment which would constitutionalize merging the two counts into a single account and constitutionalize that 5% draw. They may say it's up to 5%, but come on, we're smarter than that, aren't we?
Right,
we know that if they set 5% as the draw, that they will take 5%. So it is the long-term consequences of this proposal that, to me, makes it rise to number one on the hit parade this coming session.
Any feeling right now before we go? Any feeling on what the breakdown is in the legislature? I know that we just saw that whole thing about the 7 Republicans who are trying to unify behind a unity platform or whatever, and they've said that combining the funds is a no-no. But I mean, that's only 7 of 19 on the minority. Any feel on because I've had a lot of Republicans say, yeah, we need to combine this. And I sit down and I say, do you know why? And that was part of this conversation we were having. And then they were like, it just doesn't seem to be a lot of discussion on this other than this is a great idea.
there's going to be a big push by the fiscal plutocrats in the state, the oil companies and the top 20%, a big push for this because they view it as a way of continuing to dodge taxes. They view it as a way of continuing to have the free money from the permanent fund coming in for government to spend, and them getting off the hook from paying for the expenses that they continue to vote for in terms of spending level. So there's going to be a big push for that, and you can see it from Commonwealth North. You can see it from other sources, the chamber. You can see it from other sources that are gearing up to push for this. It's sitting in the last committees it's going to sit in. The Senate version is a Senate finance version, and the House version is proposed by the House minority House majority leader. And when I've talked to various representatives on the majority side, they've said, "Oh well, he's proposed it. I mean, he's in favor of it, so yeah, it must be a good thing." So I think it's dangerously close. It will take the Constitution requires 2/3 in each body to get a constitutional amendment out. Governor can't veto it. So it's going to take 7 to stop in the Senate and 14 to stop in the House. And we're going to be talking about this a lot, I'm afraid, during the course, whether we can get 7 in the Senate and 14 in the House to stop it.
Brad Keithley, Alaskans for Sustainable Budgets, the weekly top 3. That brings us up to the break. Number 2 is dead ahead. We'll continue. If you got people talking about this, combining the fun thing in a positive way, you ought to point them towards Brad and some of his writings over on Facebook or at ak4sb.com or at the Landmine, where he's got charts and he can explain exactly why this is not a good idea. We'll continue with more in just a moment. The Michael Duke Show. Common sense, liberty-based, free-thinking radio.
If you missed the show, you can listen to it on your time with Dukes On Demand. Oh, and it's free. Like America used to be. Streaming live every weekday morning on Facebook Live and MichaelDukesShow.com.
Okay, Brad Keithley, our guest here on the Michael Duke Show. Yeah, I mean, again, I'm amazed at the number of people who have come up to me over the last 6-8 months and have mentioned this in passing. Oh, we've got to get this done to protect this is the whole Bill Walker thing again about protecting the permanent fund by raiding the permanent fund. This is the whole, we've got to protect it by doing all this voodoo math and showing all the draws, but none of the deposits in the permanent fund or the ERA. You know, that was his thing when he did all the charts and showed how much money we were drawing out, but then failed to show all the deposits that were going in from the earnings. Same kind of thing. It's that scare tactics, right? I mean, it's the fear mongering, it feels like.
It's a combination of two things. That's part of it. I mean, the misdirect on protecting the permanent fund corpus, absolute misdirect on that. But it's also part of what went behind ranked choice voting, the ranked choice voting proposal. It's good government. People are trying to get out there and say, "Oh, it's good government. It's modern. It's, you know, it makes a lot of it's what all these other investment funds and sovereign wealth funds are doing. They're merging everything together and they're drawing at a fixed percent. It's the good government way to be handling the permanent fund." And so you're getting the kind of responses when I talk to people about it initially. People have the same reaction of, "Oh, well, you know, we need to move into the modern age with the permanent fund, and we need to, you know, adopt these things that Harvard and other places are doing." And my response to that is, have you thought through why Hammond and others, you know, set up this thing in the 2-account system? Have you thought through the protection that gives to future generations? And the answer is usually no. But, you know, that Hammond, that was a long time ago. We don't, you know, pay attention to him anymore. We're paying attention to what's going on with paying attention to what's going on with Harvard or, you know, Saudi Arabia or somebody like that. And so it's some of the same stuff that drove the ranked choice voting debate. And I, you know, frankly, I would imagine we will see Scott Kendall and others out in front of this as well. But at its core, it is exactly what you described it, Michael. It is protect the spend. It is protect the ability to draw those revenues from the fund, regardless of whether it's earning 5% or not. Protect the ability to draw that 5% from the fund. Protect the ability to have that revenue to spend, regardless of what the permanent fund corporation's doing. And it's, and people don't see that. So the way that I've tried to describe it is to say, look, there's a reason that we set this fund up in a 2-account system, and the reason still exists. And it is to protect future generations, and it's to protect overspending relative to what the earnings are from the fund. Is to protect against drawing into the corpus. And that's what the 2-account system does. It's what it did back in the 1970s. It's what it did in the 80s, 90s, zeros, 10s, 20s. It protects the fund. And what this proposal would do is open the fund up, open a backdoor into the fund to allow people to start drawing from it.
Well, and I think that's that again is the main draw here. This really, they keep saying it's about protecting the corpus. It's protecting that, but this again is the same. It's the same draw that, like I said, that Walker had, which was we want to protect it by taking from you. We want to protect it by taking from you and putting it back, and essentially saying we need to put it in our hands instead of your hands, because that's going to be better in the long run.
This is really going to be a test for particularly for Republican legislators in the House. It's going to be a test. Are you more concerned about protecting the oil companies and the top 20% and the non-resident industries? Are you more concerned about that, or are you more concerned about protecting working Alaska families now and into the future? And that's going to be that this issue, this vote, if it gets to the floor in each body, and it will, this vote is going to be that question. Who are you concerned about more? And it'll be interesting. I mean, when you look at the 7 Republicans who came out, they include some from the Valley, but not all from the Valley.
All right, hold on. We're going to jump back into it. Here we go. The Michael Duke Show.
Public enema number 1. Oh, wait, sorry. Public enemy number 1, which makes more sense. On the other hand, he's a little bit of a pain in the Michael Duke Show.
All right, we're continuing now. Brad Keithley, Alaskans for Sustainable Budgets, is our guest. There's a lot more to unpack on that. We were getting into that in the break, but we need to move on to number 2 of the weekly top 3 as we move forward. And that is something that probably many of us are not thinking of or haven't thought of, and that was, of course, the attack on Venezuela, the deportation and capture of Nicolas Maduro as the narco-terrorist dictator, I guess. But there are ramifications even for Alaska on what has taken place down in Venezuela. So, Brad, what's the rundown here?
So this is all about oil, and this is all about the potential impact of opening up Venezuela to additional investment and new production techniques, and what that could do to oil. As background, Venezuela is currently producing about 1 million a day. For reference, Alaska is producing about 450,000, 475,000 barrels a day. So Venezuela is roughly double the size of Alaska in terms of current production levels. But that's sort of Venezuela's historic low. They have been as high in the pre-expropriation period, in the period prior to Maduro and Chavez. They've been as high as 3.5, and we're closing in on 4 million barrels a day. So that's a jump of, it's like, if you went from 1 to 3.5 to 4, you're talking about adding multiple Alaskas to the oil supply out there in the world. And so people have started speculating or started, addressing what that type of production jump could do. Several things to say about it. First is it's not happening tomorrow. Venezuela isn't down to 1 million barrels a day from its historic highs isn't down to 1 million barrels a day because it's turned off valves or somehow lost markets and can just sort of turn valves, and all of a sudden it'll just all jump out there. All that historic production will jump out there again. That's not what's going on. What's happening is sort of like if you would have let Prudhoe, in Alaska terms, sort of if you would have let Prudhoe go without any sort of investment or attention to new production techniques for 20 years, Prudhoe would be a significantly lower, smaller field than it is today. The reason Prudhoe has an extended life and is continuing to produce at levels that really no one anticipated 10, 20 years ago is because Prudhoe has constant attention, constant reinvestment of new techniques, of new wells, of a variety of new things to keep that field going. Venezuela hasn't had that. And so you can't just jump in. There's not a master valve in there. You just jump in and turn, and all of a sudden, boy, we're back up to 3.5. You're going to have to go in and make up roughly 20 years of underinvestment and inattention to the type of oil that Venezuela produces to get it back up to the historic levels. The reserves are there. The oil didn't go away, but the production techniques they're using and the investment that they've got, the infrastructure they've got to produce it now just isn't up to it, isn't capable of doing that. So we're talking about potentially a period of time. Now, we are talking about, a major opportunity here. We are talking about an opportunity to go from 1 million barrels a day to 2 million to 2.5 to 3 million barrels a day. And you don't find that in the world much. You don't find those sorts of new opportunities opening up. So it's an opportunity that under the right economic circumstances and with the right incentives and with the right feel of security on the oil company's part, not physical security, but security of their investment. It's an investment that people will make. The thing you really need to, in terms of price, the thing you really need to think about, we are currently in a supply glut, and that has had the effect of depressing price. But the supply glut is not expected to last forever. It's expected to last until sometime in the 2030s, and then the demand and the supply are expected to catch back up to each other, and prices are expected to go up. That's been, when you look at the futures market, when you look at the projections made by various entities that do these things, that's been the expectation, that we will suffer through this supply glut and the resulting relatively low prices for a period of time, and then we'll start ramping back up. What Venezuela, the timing of Venezuela, which is probably 10 years before you start seeing significant additional production flows, the timing of Venezuela could slot into that picture in a way that keeps that brings additional production on, just as you think you were getting to the end of the supply glut that we're in now. And so it could add additional downward pressure. At that point, we're talking 10 years out, 5, 10 years, 15, 20 years out, bring additional pressure to keep prices down at that point. So for those who are thinking about long-term Alaska, it could have an impact in terms of continuing to keep prices at a level lower than they otherwise would be. Near-term Alaska, no impact from the oil price standpoint. There's one other factor on price. OPEC is always the wild card in this. You never know what OPEC's going to do. And in fact, Venezuela is a member of OPEC. At least they have been up to this point. And OPEC is pretty good at managing their production in a way, their overall production, in a way that sort of controls price. Not always. I mean, they prefer the price to be higher than it is now, but they've have some constraints that they've still got in place to sort of prop up price from where it otherwise might be. They're pretty good at managing price within a fairly broad range. If Venezuela does come on with the additional production, one wild card that we don't know what would happen is how would OPEC respond to that if Venezuela stayed part of OPEC. I mean, if that is one of the outcomes of this, then they would be able to help control Venezuela production to develop price. So a lot of factors at work, but generally speaking, we're looking at a 10-year down the road potential impact on price as we otherwise were coming out of the glut.
I'm sorry, go ahead.
Well, the second thing is from an investment standpoint, Venezuela opens up a whole lot of new opportunities. And oil investment isn't limitless. There isn't a limitless amount of money in the world to be invested in oil. And so Venezuela, if Venezuela opens back up and if companies go in and start investing in Venezuela, that's going to take some money out of the oil investment market. And the question is where that shows up, where the delta, where they're pulling that money from. It's not going to come from current Alaska projects. It's not going to come from Willow. It's not going to come from Pica. Those are already sanctioned, and they're going to go through as they're currently sanctioned. But to the extent there would be additional opportunities Alaska out in the future, to the extent somebody makes a big find, or to the extent somebody wants to make incremental investments in Alaska, it could have an effect at the margin on Alaska having enough money to make those additional investments. And interestingly enough, one of the companies that does have some experience in Venezuela and has some interest in seeing Venezuela production increase because they've still got debts down there, or they've still got obligations that Venezuela owes them that haven't been fulfilled yet. One of the companies that is most mentioned about going back into Venezuela is ConocoPhillips. And if ConocoPhillips decided to go back in, that's going to divert some management attention to Venezuela. It will divert some of Phillips's investment monies to Venezuela. It won't affect Willow, but to the extent there's another step out there that ConocoPhillips might have discovered in the absence of the opportunity of Venezuela, it might affect that. Again, that's a down the road thing for Alaska, but something that's out there.
Well, it also makes me ask the question about timing, because there's also a limited and finite window here where if these companies decide they want to invest and the getting's good, so to speak, before the next dictator shows up to nationalize the industries or whatever, there's also a finite window where they may want to pour a bunch of money in now to get as much oil out as possible before the change happens again, right? I mean, there's a timing issue on this as well.
Yeah, there is a timing issue. But there's only Venezuela's let their industry and let their infrastructure go down so much that there's only so much you can do. There's only so fast you can bring it back. I mean, you can't throw the world's population down there to build new things or to re-engineer the fields. And so it really, you've got to pace these things. You've got to pace investment. So it's if somebody wants to go in, they'll go in, but they'll go in a way that's paced to match the opportunity, match the things that needs to be done. So, if ConocoPhillips wants to go in and says, we're gonna start focusing on Venezuela, that's going to have an effect in terms of things beyond Willow. Is it going to start? Right. Is they're going to start sapping their attention from focusing on things beyond Willow?
2 minutes, Brad, real quick. What does this mean? You said this is a 10-year window, so it's not immediate. But in terms of a global perspective and the fact that the president continues to want to try and push oil prices down for American consumers and everything else, what is this? How does this play into the short and midterm with this long-term impact that's going to be coming? What does this play in your mind into the pricing on the short and midterm for Alaska?
Oh, I think the short and the midterm keeps responding to the current glut. I mean, the current glut's not going to go away. If somebody bombed the Saudi oil fields, maybe it would, but the current glut's not going to go away anytime soon, and that's going to continue to affect price. And so it really it just doesn't. I mean, to the extent there are knobs that Trump can twist, or Trump's successor could twist, because we're talking about a time frame well beyond Trump. To the extent there are knobs that they can twist to keep oil prices down, like, have a good relationship with Saudi Arabia and ask Saudi Arabia to turn their knob down a little bit. To the extent that they can twist those, they're going to continue to twist those. But the current situation, next 5 years, is going to be controlled by the current glut.
Brad Keithley, Alaskans for Sustainable Budgets. The weekly top 3 continues. We got more coming up We're going to continue here in just a moment. We've got number 3 right around the corner. Don't go anywhere. The Michael Duke Show, common sense, liberty-based, free-thinking radio. We return with Brad Keithley in just a moment. Don't go anywhere.
What is that?
Common sense. Regularly heard on American radio. Michael Duke Show. Radio.
Okay, Brad Keithley, Alaskans for Sustainable Budgets, our guest. The weekly top 3 continues. Ben says, does this mean the U.S. is now a member of OPEC? No. I know they said we're going to be, we're running the show, I guess, for a limited basis, but I don't know. I haven't been following this close enough to really know all the ins and outs. But Brad, this doesn't mean that we're members of OPEC, right? It just might be that our huge country might be a member.
But recall that during Trump's first term, we had an oil price issue. We had prices were spiking, and Trump pushed OPEC to get things under control. Pushed hard to get OPEC to bring down price, to do the things that OPEC can do, turn up volumes to bring down price a little bit, or to affect price a little bit. And OPEC's response was, well, you're the world's biggest producer now, U.S. What are you going to do? And Trump made some promises that essentially coordinated U.S. policy with OPEC. Certainly the U.S. didn't become a member of OPEC, and I don't think we're going to do so through Venezuela. But Trump has been known to coordinate when it fits his purposes. Trump's been known to coordinate U.S. policy with OPEC. So yeah, it really. I'm going to be fascinated by this. One of the things that really has helped OPEC, helped Saudi and others over the years, is this demise in Venezuela production. Saudi, to control price in the way they have, Saudi and others would have had to cut back their production a lot more to keep price levels to avoid price levels dropping through the floor. To keep price levels where they wanted they would have had to cut production a lot more had Venezuela not collapsed. If Venezuela was still at 3.5, then OPEC would have a much bigger problem. The other members of OPEC would have a much bigger problem than they do. So the collapse of Venezuela has been a significant help to OPEC. Now that if we go in and we help OPEC dig out, or we help Venezuela dig out from this current situation, it's gonna be a problem for OPEC, and it's going to be interesting to see how the other members of OPEC. It's going to be interesting to see how they respond. The U.S. certainly will have a lot of interaction with OPEC. I don't think they'll become a member, but they'll certainly have a lot of interaction.
This is an interesting wrinkle, but again, I'm still going back to the president's policies and what he wants and how that might be good for the American consumer as a whole, but it's kind of antithetical to what Alaska is doing as far as trying to continue to generate revenue and make a good return on the stage. And I think that, to me, is the most important and interesting thing here in the short term is how are the president's policies continuing to affect us in this regard, and what do you think we're looking at here in the short term, next 5 years, as the president winds out his term?
Oh, I think he will do things. I think he wants to leave a legacy of low oil prices, and I think that's one of the ways that he wants to say that he's addressing affordability issues. And I think he will, where he can, I think he will, propose things and do things that increase the supply of oil to keep the price down. I mean, he's opened up all of Alaska, and I'm not sure that's going to result in a whole lot of new investment or a whole lot of new development on its own, but he's opened up all of Alaska, and that's part of what you would do to increase the supply of oil and affect price. He's opened up a lot of the Gulf of Mexico. He's opened, or Gulf of America. He's opened up. He's talking about opening up other regions. So he is at the margins. He's doing what he can to increase the supply of oil in the world, and we'll continue to do that.
Yeah, and that continues, of course, to put pressure on the legislature. They have to try and figure out a way to, again, hence the combining of the funds, et cetera. They have to find a way to continue to protect the same level of spending with a lower amount of revenue coming in because of those low oil prices.
Yeah, it's everything's connected, Michael. Yes, subject 2 does connect it to subject 1, and some will cite that. Some will say, "Oh, we need to merge the 2 accounts so we can have access to the permanent fund to continue to have those revenues because oil revenues are going to be, are going to continue to decline." Look at Venezuela. I expect that will be cited as well. To me, they're 2 separate issues, but
well, and again, the looking at which we're going to get into in number 3 here, the Permanent Fund Corporation not doing their due diligence and not generating the returns that they should. This would be a good solution, but nobody wants to seem to shine a light on this except for you. I mean, you and I seem to be the only ones talking about this over the last 6-8 months, and I'm like, if you guys really want to just spend the way you've been spending, there's one way to get it done, and that's to squeeze the Permanent Fund Corporation to do what they're supposed to be doing. And if they were getting those returns, your money would be there. But I guess we'll get into that here in number 3. Brad Keithley, Alaskans for Sustainable Budgets. We're about to rejoin here and jump back in. Please like and share, follow, ring the bell, do all the YouTube and Facebook things. Love to get some folks back involved here on the program. Let's get to it. Here we go.
The Michael Duke Show. Not your daddy. Wait, sorry. Not your daddy? Ooh, not your daddy's talk radio. Whew. I was scared for a second. Thought we were going down. Here's Michael Dukes and the show.
Okay, we're continuing. Brad Keithley, our guest. It's the weekly top 3, the first weekly top 3 of the year. Oh, man. It's all good. We're on to number 3, which I think is going to be a reoccurring theme this year. And that, I have a feeling. The performance of the Permanent Fund Corporation. Brad, give us the rundown here. This is not. We were just talking about how this if they want to keep the spend up, they could do one thing to help keep the spend up, and that would be to increase their revenues from their one major source of money, and that is the Permanent Fund. Unfortunately, it is continually underperformed, and you've got some thoughts on the performance of the Permanent Fund Corporation.
The Permanent Fund Corporation quarterly produces a report called the Management and Investment Fees Report, and that is the fees that the Permanent Fund has paid to outside parties to help manage the fund and produce the returns that the Permanent Fund Corporation is achieving. Those are produced quarterly. They look at a fiscal quarter or calendar quarter. And are an important source of information about how the Permanent Fund is doing. In Christmas week, something like 86 days after the end, 86 days, that's more than 2 months, after the end of the first fiscal quarter of FY26, the Permanent Fund Corporation finally produced their fees report for the first quarter, and it was eye-opening in the sense that we're continuing to go down a road we should not be going down. I sent you a couple of charts, Michael. Do you have?
Yeah, I'm sorry. Give me a second here. I'll pull them up. You could start talking about them. I apologize.
Well, the first one is a bar chart that shows the amount of fees paid by the Permanent Fund since they've been producing their quarterly reports. They started producing these quarterly reports in 2016. You can go back in what they produced and look at the fees they paid since FY16, and you can look now over roughly 10 years of data to see what the Permanent Fund Corporation has been doing. Here it is, and it's eye-opening. The bars are the amount of money being paid on an annualized basis by the Permanent Fund Corporation in fees to third parties to help them manage the fund. And it's the bars sort of are on a continual upward drive. There's a drop between 2022 and 2023, but then they start going back up again. The latest report for the first quarter of 2026 shows that those fees are now running at a level of $950 million, nearly $1 billion annually, which the $950 million reported for the rolling 12 months through the first quarter is the highest it's ever been in the history of them reporting on the fees. They incurred these fees before 2016, by the way, but didn't report them. And there's some view that what's happened in terms of the growth over time, over particularly the first 5 years, was they started reporting more and more of the fees. Some of these fees are embedded deeply in the investments, and it takes some effort to dig them out. And so some of that growth is over better reporting of what the fees are. But now we're 10 years into the reporting, and we are now reporting, the permanent fund is now reporting $950 million annually in fees. The red line on the chart is the percent of the permanent fund investment, or the percent of the amount available in the permanent fund that's being spent on fees. And as the red line shows, it's gone from 0.3% of a percent, 0.4% in 2016, now up to over 8%, almost a 1.1% of the permanent fund amount is being spent on fees annually. That compares to Norway, for example, that's at 0.04%. If we were spending at the rate Norway reports, our spending this past year on fees would have been $38 million instead of $950 million. So you can see that the Alaska spend is very significant, both in terms of the dollars being spent and in terms of the percent being spent. What is even more interesting to me is a second chart I did as a result of some discussions with others that went back and looked at the performance of the permanent fund in terms of percent return compared to the performance of an S&P 500 ETF, exchange traded fund, electronic traded fund. And the S&P 500 ETF with the longest history is State Street's SPY fund, SPY. That's their trading name for their S&P 500 fund. Vanguard has one, others have one. Generally, I use the Vanguard fund, but that didn't start until 2011. That wasn't launched until 2011. So SPY has the longest history. And I went back and looked at it. A lot of the times that you get into these discussions with people from the permanent fund or people who are defending the permanent fund corporation, they will say, oh, the reason we undertake our approach is because we don't want to go through what would have happened in the 2008 fiscal crisis in terms of the drop in value. And you can see, if you look in the middle of the chart and look at the red line, which is the return generated by SPY, the return generated by the S&P 500 ETF. If you see that, if you look at the red line, you can see, and the blue line is what the permanent fund did. The returns the permanent fund achieved. Now, that was before fees. They weren't reporting fees during that period. So that's somewhat an apples to oranges comparison. But nonetheless, just taking that at face value, you can see that in 2008, there indeed was a deep drop in the returns generated by the S&P 500 ETF. And there was a 26% loss during that period. But look at, and so that's a fair point. You got to think about that point. But look at what's happened since then. Roughly from 2009, during which the red line, the return generated by the S&P 500 ETF, the red line jumped back above the blue line, which is the permanent fund. From 2009 to the present, that entire 17 year span, during that period, the red line has been above the blue line. That is the returns generated by the S&P 500 ETF have been above the returns generated by the permanent fund in every year since 2009, except for one, the COVID year of 2002, in which the S&P dropped below the permanent fund for 1 year, and then it bounced back. That entire span, the entire 2009 to 2026 span, has been a period during which the S&P 500 ETF has exceeded the permanent fund. So, yeah, you can look back at the 2008 and say, "Oh, that was bad. We need to avoid that." But the problem is, in avoiding that, the permanent fund has given up the upside of the S&P 500. And if you go back and do the balances through this entire period, there's another chart that I did in last Friday's column that does that. Last Friday's landmine column that does that. If you go back and look through this entire period, the S&P, the balance generated, the investment balance generated by the S&P 500 far exceeds the balance being generated by the permanent funds approach. So yes, the S&P goes up and down, and yes, in some years it's gone down a lot. But in terms of what's been going on generally and what's been producing the best returns over the long stretch of period since 2008, it's been the S&P 500.
Right.
I to some degree, I titled last week's column in the landmine the PFC's Maginot Line investment strategy. For those who know history, they will know that after the end of World War I, the French built what was called the Maginot Line, which was supposed to be hugely expensive, but built this defense mechanism, the Maginot Line, that was supposed to defend against any potential invasion by France ever again. In World War II, at the beginning of World War II, with the Blitzkrieg and with the other advanced technology and advanced tactics that the Germans developed, the Maginot Line was irrelevant. It fell like in a day. The Germans were able to end run it. They were able to overcome it in terms of air power, and it was useless. The French had made this huge investment in it, but it was useless in terms of dealing with the modern era. That's what the permanent fund corporations board strategy is reminding me of. It's reminding me of investing a lot and spending a lot on fighting, on developing the Maginot Line, fighting the last battle, while the S&P 500 and other ETFs are streaking along and producing superior returns, tremendous superior returns.
Yeah.
Ever since that time.
Brad Keithley, Alaskans for Sustainable Budgets. We're out of time for this hour. We got hour 2 dead ahead. Brad, thank you so much, folks. We'll be back with more right after this. Sorry, Brad, we had a hard break there. You know what's interesting to me on this chart? Again, going back to the return chart, it's like the PFD or the PF Corporation is continually showing you, look, we did better. We did better on a year-to-year basis. But isn't investments a long-term game? I mean, if you look at it in a 10-year period or a 15-year period or a 20-year period, as we're looking at this, even though they had some great drops, I mean, again, 2008 is a huge, as a huge example of that. But on the other side, the fact that they're above the line so much, those returns would have outweighed any of those drops, right? I mean, you did the math on where the permanent fund would be today. Instead of 80 billion, it'd be what, 125 billion dollars if they had just stayed with the S&P, with an S&P type fund over that same period of time. It seems like they're fighting an annual battle instead of the long-term investment battle. It seems like that's their excuse here.
Yeah, it's more than that. They're fighting a past battle. They're saying, look at 2008, look at 2008, look at 2008. We're protecting you against 2008. Well, we're now 18 years down the road from 2008. We've only had 1 year in the period since when the permanent funds approach has outperformed the S&P 500 approach, and the superior performance of the S&P 500 prior to that 1 year and the superior performance of the S&P 500. I mean, look at it since 2022. Look at the red line and how it has exceeded the blue line since that time. The focus on 2008 is driving an investment strategy that is hugely expensive. I mean, that's how they justify spending $1 billion a year, nearly $1 billion a year in investment fees. hugely expensive compared to alternatives in the world. And that's what's driving that. I mean, this focus on 2008 is what's driving that. And it's what's driving the focus on, taking safety first, maintaining these low risk investments and passing up the opportunities that the market's giving you. So it's not so much a year to year thing. It's just, the continual focus on this one event in the past that they think is justifies these huge fees and justify an investment strategy that is having Alaska miss out on all of the market opportunities that are out there for everybody else.
I see Ben is making a comment that I've heard in part from other people. Does a permanent fund gaining outstanding return get us more or less government? But that's a question. I mean, we're getting more or less government now. They're just taking it all from the permanent fund and taking it from the people. I mean, at least, would it mean a bigger permanent fund for us, or would it mean more government? And that's a different problem. But again, their whole point here in trying to combine the funds is to keep that spending up. If they had 120 million in the permanent fund versus 80 million, they'd have bigger returns anyway. I mean, again, this is a problem. And if it's $1 billion a year, how much is that $1 billion compared to the return? How much does that eat into the return every year? If it was only 40 or 50 or $100 million versus $1 billion, how much more would be reported then in the return? So, I mean, I understand what Ben's saying here, but at the same time, we're not getting the biggest bang for our buck.
I mean, one perspective on this, one perspective I would take on this is, look, we're going to spend what we're going to spend, and they're going to take it out of the SBR and CBR and permanent fund dividends, and they're going to try to crack into the corpus, open a backdoor into the corpus to continue spending. And so what building permanent fund earnings would do is relieve the pressure on cracking into permanent fund dividends. It would allow us to rebuild the CBR. It would allow us to rebuild maybe the SBR. It would relieve the pressure on the other sources of revenue that they're using to continue to fund the spending. So, more money to me. More money from investment returns is never a bad thing.
No, because again, you're losing out. And going back to this other chart, if you go back to 2016, and I know you said they weren't accounting for all fees at that point, but from 2016 to 2026, 10-year period, you saw an 80% increase in the fees. 80% in 10 years. That's insane. I mean, that's insane, especially when you look at the returns that they're getting for that 80% increase versus what you would see in an S&P. I mean, it's mind-boggling at that point.
Yeah, at one point, I think in the first segment, I was talking about the Permanent Fund Corporation taking a CYA, cover your ass type approach. And basically what they're doing is saying, look, we're worried about 2008. We're going to protect against 2008. If it ever occurs again, we're going to be there protecting against it. And look, we paid all these fees to all these advisors. Ain't our fault if it goes bad. Ain't our fault if we miss out on opportunities, because we paid all these fees to all these brilliant advisors to tell us what to do on our investments. That's one of the things when Warren Buffett developed the 90-10 approach that we've talked about before on the show, that 90% of which is invested in the S&P, an S&P ETF, and 10% of which is invested in a bond ETF. Buffett said, look, one of the biggest problems out there in the world are investment advisors, because they're always touting their product and saying, right, oh, you're going to earn these superior returns. You just have to pay us a little bit to get that, but you're going to earn these superior returns from our product. And Buffett said that is one of the biggest problems in the investment community, because you're spending all this money on fees. You're not investing the money. You're just paying it in fees, and you're getting these safety first returns. And Buffett said, you look over time, the 90-10 approach is going to produce superior returns at much lower cost, because the ETFs have much lower cost than paying advisors.
Brad Keithley, Alaskans for Sustainable Budgets. Brad, thanks very much. I hope, again, you're feeling better and you continue to recover. We'll talk to you again soon.
Michael, as always, thanks for having me.
All right, folks, we're out of time. We got more coming up. The Michael Dukes Show right now.
Whoa, buddy. Put that thing back in its holster. We haven't gone anywhere.
I don't understand.
Check out the MichaelDukesShow.com for information on how to get access to the podcast.
Welcome to the party, pal.
The Michael Dukes Show.
The greed and the entitlement is astounding to me.
What more could you want from a low-budget radio program?
This is a dumpster fire.
That was just BS.
It is time to get a new perspective.
We know just what you need, and we've got just the cure. Open wide and prepare for a steaming hot cup of freedom.
I just don't fathom it.
The Michael Dukes Show, streaming live across the world.
Live around the world on the internet at michaeldukeshow.com and across the state of Alaska on this, your favorite radio station and or FM translator. Hello, my friends. Welcome to the program, Hour 2 of the Big Radio Show. We just finished up with Brad Keithley with Alaskans for Sustainable Budgets. And I got to tell you that, we were just talking about the returns on the permanent fund. And I think Ben Carpenter, who's in the chat room today, has made some valid points and asked some good questions that I think we should tackle. Now, to point things out for folks who are listening on the radio and couldn't see Brad's charts, I'm going to make a few observations on these. I'm going to make a few observations on these things, specifically in talking about the fees, because Ben Carpenter makes a comment in the chat room asking, would we care about what we're paying for fees if the returns were beating expectations? And I would argue that the answer to that is not as much, but we still should, right? I mean, if you've got a money market account and you're like, oh, I'm paying a lot of fees for this account, but the returns are beating expectations, so I'm okay. But if I could find something that was getting the same type of returns and paying less fees, wouldn't that be financially and fiduciarily, wouldn't that be money-wise? Wouldn't that be responsible if I could find the same returns for less fees? Now, one of the charts that Brad brought up was this chart about the management fees from the permanent fund. Now, you can't see them on the radio, but I'm just going to give you a brief description. It's a chart that starts in 2016 and runs all the way to 2026. And it's a bar chart, right, that says here's what the Permanent Fund Corporation has paid in management and performance fees over this 10-year period. Now, the most astonishing thing to me is that the difference between 2016 and 2026, that 10-year period, is that the management fees have increased by 80% in 10 years. They started out in 2016 at about $200 million. That's what they're paying in management fees back in 2016. Now, he did say that they weren't accounting for all fees, so there's some things that go, but we're just going to take it on the base of what's going on here, because it's 80, even if it was 50%, but it's an 80% increase from 2016 to 2026. We're paying $1 billion, $950 million and change, $1 billion in management fees. Now, when you look at the return, and if you get a 6 or 7% return on the permanent fund at $80 billion, you're only getting $5 or $6 billion in returns. If $1 billion of that is then consumed by the management fees, that's a significant chunk of your returns. So while I agree, I agree, Ben. Yeah, I mean, we're all happy if we're beating returns, then we may be happy to pay the fees. But wouldn't it be responsible of us to ask the question of, can we get these returns, these same returns, for a lesser cost? I mean, It depends. But the fact that we are, especially when you go to another chart and you look when Brad has charted this out as far as pegging the permanent fund to an S&P fund, like the Vanguard or the SPY fund that he was just talking about, and you start looking at it and you realize that while it is more volatile than the current permanent fund strategy, overall, the momentum is all upward. So yes, there were, 2008 was a bad year. 2008 was a tough year. The returns from the permanent fund in 2007 were minus 3.6%, meaning it lost 3.6% of its value, while the S&P fund lost 13% of its value. Right? That's a tough one. But then in the years beyond that, the returns on the 500 fund were 50%, 100% more every year. Between 30 and 100% more every year going forward, with the exception of the COVID year. And when you've got a return where you're getting 41% return on an S&P fund versus a 29% return on the permanent fund on their managed plan, you got to realize that time and time and time again, it's beating those expectations, and that adds up. So if you only have one or two dips in a 15 or 20 or 30-year period, you realize that overall, as Brad has said, he's done the math, he's got charts on this. You could see that the permanent fund should be, if it had been pegged to an S&P 500 fund, should be at 120 to $130 billion versus $80 billion. Now, that leads to another question that Ben asks. He says, does a permanent fund gaining outstanding returns get us more or less government? Well, it's almost beside the point, because what they're doing right now is they're still continuing to spend no matter what, and they're taking all the money. Maybe they wouldn't take as much money from us. I would say under the current leadership, under the current philosophy of the legislature, we would probably have more government if the permanent fund was at $120 billion. We probably would have more government, because the people who are in there right now have no interest in living within their means. But maybe, just maybe, they would be taking less of the permanent fund. I don't know. But even with that being said, Ben, I would argue that as being, financially responsible, being fiscal hawks, we should be looking at this and going, are we getting the most bang for our buck? Are we getting the returns that we need? And the answer to that is no, we're not. And nobody else has really been talking about this. Nobody else has really been talking about this component of the Alaska fiscal future. And it's unfortunate, because it is, and the permanent fund is going to continue to be, in the future, the number one driver of state revenues. I mean, oil is down into the 20s now? Oil used to represent the lion's share of the revenue that came into the state of Alaska. And now it's taken a back seat to permanent fund earnings. Now we're only getting, 20, 23, 24% of our revenues are coming from oil. The rest of it's coming from the permanent fund. We should be analyzing how to make that engine run smoother and more efficiently. It should be a question. And instead, what we're seeing is this discussion on, well, we need to protect it by tapping into it. We need to protect it by combining the funds and giving the legislature access to the corpus, which has heretofore been shielded from legislative avarice, right? Because it's constitutionally protected. And now you're seeing this huge movement on the part of, legislators on both sides of the party aisle, both Republicans and Democrats, who are pushing for, we really need to put these funds together to protect them, which I've never understood. I've never understood the argument of, we need to protect the permanent fund corpus by combining the funds and removing that barrier. I mean, I just don't understand. They're going to consume all. I mean, this is Parkinson's principle for government. Government will consume every available dollar to it and spend it because there's no consequences. They think it's always going to be there. And when they think that it's not going to be there, or they think that it's about to get too hard, you'll see them pull the ripcord. And I mean, Gary Stevens is gone. Lyman Hoffman is gone. We saw Tom Begich pull out. I mean, I think you're just going to see people who have been pushing this for years, are more and more of them are going to start dropping out as the hard choices are going to be put right in front of us. This next legislative session is going to be brutal as far as financially brutal. That's the problem. And what's going to continue to happen is that they will just continue to drain out the permanent fund dividend to the point to where there is no money going to the people, and it will all be going to government at some point. And the reason why you're seeing this huge push right now to try and combine the corpus and the earnings reserve together into a single sovereign wealth fund is because the legislators understand that. They understand that they're going to slowly have to stop paying a PFD. And once they've consumed all of the money, which would be the additional, this last year, it was what, $660 million is what they paid in PFDs. Once they consume all of that money, there's no more pots to draw from. There's really no more easy money available to them. I mean, they can maybe tap into the Higher Education Endowment Fund like they did in part this year, or they could maybe tap into the PCE or some of these other funds that are out there, but it becomes a lot more politically sticky than what they're doing right now. There's no more easy pots of money to draw from. So once that $600 million plus is consumed by government instead of being dispersed to the people where it was supposed to go, instead of that, they won't have it anymore. That's why they're talking about this, because then they don't have to make the hard choice, because then they can just draw the 5%, whether there was enough earnings or not. And if that eats into the seed corn, well, that's a problem for future me. That's a problem for future us, or for, people who will be here. I won't be here. I'll be retired. My grandchildren won't be here. They'll be gone. That's a problem for future people. But at least now I don't have to suspend my appetite for spending in the meanwhile. That's what it's all about. I mean, this is some crazy stuff, folks. And if you don't start looking at it and realizing that this is an important thing for us to start talking about and address, we're going to be in real trouble. But the problem is that we keep sending people back to Juneau who do exactly the same thing, who have no problem. There was an article in the Watchman, which we're going to get into in the next segment, that Greg Sarber over at Seward's Folly wrote, talking about Alaska rhinos, right? Alaska rhinos. And he's talking about all the Republicans in there who are the business as usual Republicans. Kathy Giesel, Kelly Merrick, Jesse Bjorkman, Gary Stevens, Bert Stedman, Chuck Kopp, Louise Stutz, right? These people. That's who we're talking about. We keep sending the same group of people back and expecting different results. We eliminate people like Ben Carpenter, who was doing his darndest to try and bring us, into fiscal fiduciary responsibility. Thank you, Ben. That was the phrase that I was looking for. The being fiduciarily responsible. And instead of supporting him, he gets axed in favor of the tax and spend Republicans. Because make no mistake about it, the taking of your permanent fund is a tax, baby. It's a tax. And that's what it's all about. But when you look at this and you look at the permanent fund, nobody else is talking about this. Why? Because it's complicated. It's complicated. It's it's at a higher remove. It's out of sight, out of mind. People are not really thinking. Most people don't understand how the permanent fund or the permanent fund dividend works. They don't understand how it all comes together, what the formulas mean, what it all does. They just look at their legislators and nod when their legislators tell them this is what we need to do. We need to be talking about this at every opportunity that we can, because this is going to be a huge issue. And the problem is that this is going to have to go before the people. If they decide to combine the funds, this not only needs a 3/4 vote of the legislature, but it'll then have to go in front of the people. And unfortunately, the people are easily bamboozled. We saw that with ranked choice voting. We've seen this with other things. This is not 1999 when they made the run at the permanent fund. It was more overt, and there was an 83% no vote on touching the permanent fund. 83%, 82.9, whatever it was, 83% said not only no, but hell no. They've gotten smarter. It's now more overt, and it's now more covert, rather. It's not an overt run at the fund. It's covert, and they keep saying we're doing it to save you. What they're doing is they're doing it to save their ability to continue to spend your money in the way that they want to, instead of the way that you want to. All right, we're going to continue here in a minute. We're going to talk a little bit about this article from Greg Sarver. And also there's an opinion piece from Paul Bauer, who is the chairman of the District 20 in Anchorage, the Republican District 20 in Anchorage. And I don't know. I might take some issue with this. We'll have to see. We're going to continue here. The Michael Duke Show. Common sense, liberty-based, free thinking radio.
Listened to by more staffers in Juneau than any other show, because their bosses told them to. And after what they just heard, oh man, they're going to be pissed.
You're a bad, bad man.
The Michael Duke Show.
Okay. All right. Okay. Let me go back over here. See what you guys have been talking about. Harold says the permanent fund isn't large enough to support a POMV for both government and the PFD. Again, that's a spending problem, not a revenue problem. Ben says a government that must come to the people for additional taxes has a greater lift than one that needs to increase investment earnings. That's true. If they came to the people and said, well, we've got to raise additional taxes, it would be more unpopular. That's why they're doing this, because they're looking for a behind the scenes way to increase revenues without having to explain to the people that they need more revenues and that it is a tax. It's a stealth tax. The combining of the funds would be a stealth tax. Not only a stealth tax, but it is a poison pill that will eventually kill the golden goose. The fund is the golden goose. The dividend is the returns from that goose, right? It's the golden eggs. So instead of just, wanting just the eggs, now they want the eggs and a goose leg on the way out. Well, you can only eat the goose so long before it stops laying. The lack of easy money doesn't prevent additional taxation. Again, we have a philosophical problem in the legislature. We've got a group of people in there, many of whom have been there for decades, who have no problem continuing to spend whatever they want to spend. Brian says, can you use responsibility and the Alaska legislature in the same sentence? No, not really. Not if you're honest with yourself. Not if you're honest with yourself. Here's the authoritarian view. Listen to you. You were upset at Paul Seaton when he said you just don't understand. I'm not saying that people are not capable of understanding, Harold. Harold's chastising me because I said people don't understand how the permanent fund works. I'm not saying that they're not capable. I'm saying that most of them are not taking the time to figure it out. They just they trust their elected leaders. Would you disagree, Harold? Have you run into a bunch of people who understand the ins and outs of the permanent fund itself and the way the corporation generates returns and how the dividend works? Would you say that there's a ton of people out there who all believe in the? I mean, am I wrong in that? I'm not saying that they can't understand. I'm saying that many of them are not taking the time to do it. Frank says when conservatives were in charge, government still grew. Exactly. Were they really conservatives? And when you say conservatives, you're using that word, but I don't think it means what you think it means. Right? They were just Republicans. They weren't conservatives. They were just Republicans. They were just big government Republicans. That's what we're dealing with. Excuse me. I'm laughing here because Brian just said, the goose, in my analogy, the goose is a racist, bigoted, homophobic, and probably white. It needs to die. Regardless of the fact that it's providing everything, it still needs to die. You know? Is the greater threat to prosperity taxes or government growth? Ben, I would argue that government growth is the bigger threat to prosperity. Taxes are still not great. But the fact, if government grows unchecked, then taxes are an inevitability at that point. Right? If government growth just continues, they eventually will have the power to do everything. So it doesn't matter. That's the problem. Jeremy says they're going to take the PFD and take the permanent fund and the corpus and then text you, and you're going to like it. Oh, I mean, that's the whole problem. Ruben says, bingo, rhinos. We need a huge target on the back of these rhinos, but we also need conservatives to stand up and file.
The Michael Duke Show. Not your daddy. Wait, sorry. Not your daddy? Ooh, not your daddy's talk radio. Whew. I was scared for a second. Thought we were going down. Here's Michael Dukes and the show.
Okay. Chris Story's going to be joining us here in about 12, 15 minutes or so. We're going to get the weekly uplift that we need. That's all coming up here in just a few moments. Some big weather advisories. I forgot to give it to you. I was so wound up at the beginning of the hour. Big weather advisories for the Kenai Peninsula Borough. 4 to 9 inches of snow, mostly surrounding southern Ketchimack Bay, with winds as high as 50 miles per hour. That's now until noon on Wednesday. Difficult travel, et cetera, et cetera. In Anchorage, heavy snow, 4 to 9 inches. Visibility to 1/2 mile. Also, in the Mat-Su, both the Mat-Su Valley, the Susitna Valley, looking at additional snow warnings with light powdery snow, again, going on through Wednesday. And so Mat-Su, Kenai, Anchorage. Fairbanks is actually pretty nice right now. Fairbanks is warmed up quite a bit. I saw somebody said it was 6 below in North Pole, which is a heck of a difference from the 50 below you had just the other day. Anyway, it's going to be a little windy, little snowy, and winter's here. That's all we're saying. Winter's here. On the good news, we're gaining daylight every day. What is the The daylight is going to be I think we're gaining six minutes, right? 6.5. Pretty darn good. Pretty nice. We're getting some of those, getting some more of that vitamin D, that sunshine. So that's some good news. We were just talking about here, and no snow or 50-mile-an-hour winds in Fairbanks. So I mean, they've paid their price. They paid the price there. Opinion piece from Greg Sarber over at the Alaska Watchman. Greg Sarber writes his blog over on Substack. It's called Seward's Folly. We talked to Greg here not too long ago about some of the different things that are going on around the state, and he writes some good stuff. He also writes for the Watchman and occasionally on the opinion page, and he's got a piece out that came out yesterday talking about Alaska electing rhinos, Republicans in name only. And specifically, he's talking about, Louise Stutes, Chuck Kopp, Bert Stedman, Gary Stevens, Jesse Bjorkman, Kathy Giesel, Kelly Merrick, the people who are making up and who have capitulated, because most people don't realize is that even though we have a bipartisan legislature as far as in majorities, that the majority of people in the legislature, the majority of elected officials it's Republican majority. But the Republicans have made the deals with the Democrats to create coalition majorities. Now, some would argue, well, it's that important. It's a bipartisanship that we need and everything. No, I think this is opportunism. I think they see the opportunity to get what they want. And I would argue that most of these Republicans are not, Republicans in name only. I guess they are. That really is an apt moniker at that point. We've got 7 Republicans who have joined Democratic caucuses. And Greg asks, he says, you've got to wonder if these rhinos were ever really Republicans in the first place, or did they just sneak into their offices? Well, it's going to be interesting to see. Now, part of the problem is that some of these people really bring home the bacon for their districts. And in doing so, they are protected. Bert Stedman is one that, I don't think Bert Stedman has had a solid, legitimate challenger in years. Bert Stedman out of Sitka. And when you look at Sitka, being a Republican in Sitka is probably, Sitka is not what I would probably call a super conservative area to begin with. And so when you have somebody coming out as a Republican from an area like that, you're not expecting them to be, constitutional scholars or what, you're not expecting them to be founding father type material. The one that really surprises me in this whole group, by the way, the two that really surprised me. One is Jesse Bjorkman, again, who defeated Ben Carpenter in what I considered to be a real smear campaign on the peninsula here this last year. And the other is Kelly Merrick, who lives in Eagle River, probably the most conservative district in the entire Anchorage municipality. But again, Kelly hasn't had a real solid challenger in a while. Plus, she's got the backings of her husband's a union boss. And so she's got the backings of all the unions and all that money and everything else. And it's surprising to me that they keep getting sent back. But again, we had Gary Stevens, we got Bert Stedman, Louise Stutes keeps going back again and again and again from areas like Kodiak. We're broadcasting in Kodiak right now. Somebody in Kodiak's probably listening. And I've asked the question, why do you guys keep sending back Gary Stevens? Why do you keep sending back Louise Stutes? Generally speaking, it's because they're very good on one issue. Kodiak, for example, it's all about the fisheries, right? That's their number one thing is fisheries. And if Gary Stevens and Louise are super strident and good about the fisheries issue, then everything else is kind of just, meh, as long as they're good on fish, we don't care. It's like nothing else matters. And, while I agree that's important, we really need to look beyond that. Now, Greg goes on to talk about that, this is an election year, and the only of the 7 rhinos that he's pointed out here, only 2 are really safe, and that is, of course, the 2 that I just mentioned, Jesse Bjorkman and Kelly Merrick. They just both went through their reelection, and they won't face reelection for another 2 years. It'll be 2028 before they are up for reelection. The other 5, though, will be up for now. We already know that Gary Stevens is leaving, and that Louise Stutes is running for his seat. Now, what does that mean? Well, there is an opportunity for a conservative candidate then to step into Louise Stutes' position and potentially do something there. Will it happen? I don't know. I'm not familiar enough with the landscape in Kodiak to know whether or not that there's somebody who's ready there to take that on. And part of the problem here, again, is the leadership of the GOP in the state of Alaska. I've said it time and time and time again, that a big part of the problem that we have here can all be laid at the feet of the Republican Party in the state of Alaska. Because there has been so much infighting and political maneuvering and power brokering and power chasing that instead of fulfilling the goals and the mandate and the mission of the party as a whole, they get caught up in all this. I mean, and this has been going on for years, right? I mean, this is the whole Randy Rudrick thing, and then the different presidents, and you got Lisa Murkowski, and it's been going on for years, where the leadership of the party has ignored a lot of the districts and everything else, and that it's the weak leadership in the GOP that's been to blame for a lot of this. And I would agree with that. Now, Carmelo Warfield, who's the new chair of the Alaska Republican Party, still haven't had a chance to talk to her. Been trying to get her on the program on and off for a year since she's taken over. Still haven't been able to talk to her about that. Would love to have a conversation with her about it, because one of the things that people said was that she was there to try and stop some of that infighting, and her goal was to kind of pull all this together. I don't know if it's going to happen. There's a second opinion piece written by Paul Bauer, also in the Watchman. I saw these back to back, and they kind of folded into each other. And the headline reads, "Frustrated with Alaska's GOP, then joined the party to press for change." And, I'm going to argue with Paul on this, because his argument basically says, if you're frustrated with the party, the district chairs, the solution is not disengagement or dismissal. The solution is participation. Join the party, show up, engage in the process. And I would argue that people have been doing that and have been trying. And that there's only so much energy that people have to do something like that. And then they just throw their hands up in the air and say, why bother? I would argue that maybe it was time for a third party, but of course we just saw that the Alaska Independence Party, they fizzled out and finally disbanded and dissolved themselves here last month after 30 years in Alaska, being the third largest party. And I would just argue that, if you think that more people coming in to try and change it, there needs to be a house clean. At some point, the Republican Party needs to clean its own house, or just explode or implode, or whichever is more apparent to you. They need to do something on their own. You want to inject all this new blood and everybody else to come in and fight your fight. You guys are the ones that made this bed. I would argue that you probably should try and clean it up yourself. Because people like me, people with my point of view, or people who are just they'd rather just burn the bed down and go get a new bed. Right? You don't try and delouse the bed. You just set it on fire and go get a new bed. You guys, the Republican Party, the Republicans in the party need to take control of this. I had high hopes that somebody like Carmela would make a difference in that. And maybe she has. I'm not seeing everything behind the scenes, but I'll be honest. I had some conversations yesterday with a few people in various positions around the state in regard to things. And like with this nomination process of these 2 House seats in the Matsu, there were some kind of shady, back patting, favor trading things going on in some of these appointments. And we're supposed to be above that. Right? Conservatives are supposed to be above that. I wouldn't say Republicans, but conservatives are supposed to be above that. But it's frustrating. I don't know if joining the party and pressing for change once you join the party, I don't know if that's going to fix it. I really don't. I mean, look at this. We've had 30 years of rhinos already in there. Is there really a way to fix it at that point? I mean, that's the question, right? But that's the thing. All right, we got to I'm gonna be back with more here in just a moment. Don't go anywhere. We'll be back. The Michael Dukes Show, common sense, liberty-based, free thinking radio.
Running on 100% pure beard power. Oh, also some coffee. We dip our beard in coffee.
Ha, nice beard.
The Michael Dukes Show.
Sitka is Little Seattle. Exactly. Has what's-her-name ever consented to come on the show, says Brian. Carmela Warfield is who he's talking about. No. She's after I got a hold of her and we had a text exchange shortly after she joined. She said, let me get my feet under me and we'll talk. And then I've sent a couple texts, no response ever. Ben says the party now has legislative priorities to focus on. Who will support them? I mean, that's the problem. It's like they're arranging deck chairs on the Titanic. We're going to create all these legislative priorities that we need but who is going to execute them when you keep sending back these weak-kneed, who's going to push them? If the members that you've got in there right now won't support the legislative won't even support the party platform, how is new legislative priorities going to be fixed? When you got people being censured and all that. There's another story. Rob Yunt is now going to he's facing formal charges by the party. They've asked to sanction and censure him. Districts 27 and 28. I mean, if you keep sending people down there who won't even uphold the party platform, how do you expect them to focus or push your legislative priorities? That's the problem. She's been a big disappointment, says Terry. He's talking about Carmela. Brian says burning down the beds creates jobs for bed builders. It's a new industry, Brian. A new industry. Analogy. It's like getting into a pig pen and being surprised when you come out smelling like a pig. Shocking. But yeah, I mean, the party has legislative priorities, but if you can't send people down who agree to the basic party principles, then how do you expect any of those priorities to be implemented? Frank made the comment early on, an hour ago or something. He said, even under the conservatives, the government grew. I would say it's not the conservative. It was the Republicans. Just because they're Republican in this state doesn't mean that they're conservative. That's the bottom line. It's kind of crazy, I tell you. Crazy. All right. Should we bring on Mr. Story? Mr. Story. They call him Mr. Story. We'll see what he has to say this morning here on the what his dog has to say this morning. Good morning, my friend. How are you?
Good morning. Even the richest man in the world has figured out a third party is not the solution.
Yeah. Wait, and what are you referring to specifically?
That Elon Musk has
yeah.
rejoined Trump and dined with him at Mar-a-Lago, was saying nice things. He was threatening a member of a third party, and
Right.
it's not the answer. I think the answer is to fix the patient, heal the patient, not or fix the marriage versus creating a throuple, if you know what I mean. Are you aware of what throuples are, Michael? Are you hip enough to even understand that?
That got weird real quick there, Chris.
Happy New Year.
Yeah, I know. Hey, it's I'm happily monogamistic, so it's I don't have to worry about that. But I mean, that's the thing. I mean, do you think we only have a couple minutes here, but I mean, you and I have had this conversation about the Republican Party as a whole. I mean, the Republican Party is to blame for a lot of the problems that we've suffered in the state over the last 30 years. There's no two ways about it. They keep letting people and keep supporting people who don't even support the fundamental platform of the party. That's an issue.
I think it's the people. I think you're exactly right. Rather than blaming the party, I think, well, okay, fine. Blame the party, blame the previous heads, be they titular or actually selected and elected and appointed heads of the party. Although it's the consumer, it's the customer, it's the people who make up the party that are putting these folk in power. So really, I think it's changing the minds of your listeners and or the people that are paying attention to party politics in Alaska. It's a change. Look, wouldn't we be happier if 90% of Lisa Murkowski's voters just registered as Democrats? Yes, and she too. Right. But at the same time, I don't think the party's to blame. I think it's really at an operational level. Let's just keep this conversation going and try to make it better.
Well, it's the people. I mean, the party is made up of people, right? I mean, so it is the party, and it's the people in the party, and historically, it's been a leadership issue. And again, I'm not a Republican, but I mean, I can look at it from the outside looking in. Trudy just said, "All I'm hearing is complaining. Let's come up with some ideas for success." Okay, Trudy, the idea is that the Republicans clean their own house. That's what they need to do. They need to make some hard choices. And nobody wants to get involved and jump in there and try and clean it up for you. You guys need to clean it up yourself, or otherwise people aren't going to want to participate. All right. Hold the line, Chris. What's our topic for today, quickly?
The blank page.
The blank page? Okay. All right. Hold on. Here we go.
The Michael Duke Show. Seriously humorous with a pinch of intellect. Sorry. That is humorous. Here's Michael Dukes.
That guy is so mean to me. Almost as mean to me as Chris Story, who's a positivity. It seems a little weird. He's like this positivity guy, and yet he is so mean to me all the time. I don't understand. Hello, my friend. How are you? Happy New Year.
Teaching through passive aggressive behavior. That's the way I do it.
That's how you do it. Yeah. You've got a few pupils who you just say, I can't go the regular route of love and kindness. I've got to just shame them and chastise them and to be passive aggressive. All right, Chris, our first positivity boost of the year, and you're here to talk about the blank page. What do we talk? This is a new year, so I'm expecting something really good out of you. I know that I'm going to be disappointed, but let's go ahead. Just what are we talking about today?
Let's see. Hold on, right there. Do you see that? People get it. They understand who's the real aggressor here, and it is not me. Okay, so the blank page can either frighten you or excite you, and literally, it's that simple. You get to make up your mind. If the blank page that you sit down at a typewriter, and let's say you've got to write an essay or a book or a thesis paper, whatever it is, and you look at that blank page and you're intimidated, or you can be excited. There's a great quote. I forget his name, but he was an Imagineer at Walt Disney World for a long time at Disney Enterprises, and he talked about the excitement of the blank page, and that some artists within the Disney family would just become crippled at the sight of a blank page and starting something new, and it excited him. And I truly believe that is what we have every day. We have that opportunity. But I think as we look at this new year to come, I think we could look at it like, okay, it's a blank page, because one of the greatest fears I think any of us should have is living the same year over and over again. Not living 10 years, but living repetitively the same year 10 times. That's scary to me. That's far scarier than the blank page. When I was really young, I was probably 16 when I started this endeavor. I wanted to write a book, and I was calling it a collection of thoughts and teapots. Like anybody cares what a 16, 17-year-old thinks. But or let alone I was making pottery teapots, and the greatest thrill of my life at the time was to not put a lid in it. So there was no lid. There was no, and people would ask necessarily when I would show them the teapot, they say, well, how do you get the tea in? And I would sort of rub my very wispy mustache and say, indeed. How do you get the tea in it? Anyway, long story short, one of the quotes that I wrote was that you have to look behind you to see where you're going. And I actually probably stole that from some Chinese book I was reading at the time about pottery. But the idea of looking back to see where you're going, it's a good idea to look at the wake behind you when you're in a boat to say, what's my course here? How am I traveling? Or the path on a trail? Where did I just come from? Because that will inform where you're going. And I think this is the perfect time of year as we look at the blank page of 26 to look at the filled out page of 2025. Take a minute, take some time to ponder, to really look at the life and times of 2025 for you. So you don't move forward too quickly without spending a little bit of time remembering and reflecting on the year we just concluded. And there's going to be ups and downs. There's going to be some triumphs and some tribulation. There's going to be times where you were just sort of unconsciously operating, and other times you remember being very intentional and purposeful. So I think it's good to go into the dreaming room, as Michael Gerber calls it, the dreaming room of tomorrow, but take a minute and pay some homage to yesterday and think about what went right, what went wrong, and what do you want to do differently this year. It's your year. This is the year of you.
Well, and this comes back to something that you and I talk about, I swear, almost every week, which is the period of people having to self-reflect. My wife and I were having this conversation last night about how she wanted to take a bath or something. She said, I'm going to listen to a podcast or something. She was worried that her phone would keep me up because I was going to go to bed and she was going to take a bath. Anyway, she said, because, I can't be quiet. I gotta have something. And we started talking about, how people, myself included, sometimes, I've got to be listening to something or I've got to be reading something. People have a hard time being quiet with their own thoughts and being self-reflective. Looking back, that takes some self-reflection. And I think that is getting harder and harder with technology and everything else. It's getting harder today than it was 10 years ago to have that moment of self-reflection and quiet and to look back and to, do some self-analysis and analyze yourself, look at your last page or whatever. I think that's getting harder.
I'd agree with that for sure. Yeah, you're right. It's a blessing and a curse. We have this constantly available information. Like there's so many books published every year, you couldn't read them all. There's so many podcasts, hours of podcasts and radio and everything else put out. You couldn't consume it all. You can't consume all of the music that's put out today. There's just not enough time. So we do have this unlimited amount of options. And that makes it even more important to look at the menu of your life and go, okay, what do I want to do? Like, who do I want to become in 2026? Who do I want to contribute to? Who do I want to influence me? Who do I want to influence this coming year? What about your health goals? They don't have to be drastic, like I'm probably not going to put 6-pack on my list this year. We'll see how it goes. Probably not. But what about my health and mental health and everything else? What do I want to do and become this coming year? And what sort of income do you want to have? And what about prosperity? What do you want to do in 2026 that will pay you dividends in 5, 10, 15, 20, 30 years? And again, looking back at 2025 can inform what you're going to do. but you may make some different choices for this year. And I hope you do. I hope that the list looks vastly different than just last year. So you're not just repeating again the same year over and over. And I think also the thing that gets missed is we're the most charitable country on the planet. We're the most charitable people on the planet. But at the same time, are we intentionally setting a giveaway goal at the beginning of the year? What do you want to contribute? How much? To whom? And not just money, but your time, energy, and effort into your family, your community. All those things go into that charitable, what will my year look like? And then faith. Maybe you've wandered off path and it's never too late to come home. Maybe that's something you could look at for the year. But I think just being intentional with your time here on the planet is important.
And looking at that last page will definitely help you inform how you're going to fill out the next page. I mean, I agree with that. How would you encourage people? We're down to 2 minutes here. How would you encourage people to take that moment for the self-reflection so they can look at the new page? And I'm sorry, I don't mean to hijack it and go back to that again, but how does Chris Story find those moments of quiet and not be distracted by everything else? What do we need to do?
Well, again, just deciding words matter. And so if you're excited about the blank page of tomorrow or fearful of it, you get to choose which word. Are you excited or are you afraid of it? If you choose to be excited about it, like I was afraid of flying for a long time, I decided to embrace it. And I started saying to myself as a mantra, I love the thrill of flying. And it worked for me. And I think the same could work on something as simple as designing your life and saying, I'm going to look back, see where I've been this year, last year, whatever it is, however far back you wish to go. Choose the path you want to go forward and be intentional about the words you accept. Like, did you fail or did you just merely attempt something that didn't work? Or you started something that was really successful, decided it wasn't for you, because not everything does fit like a OJ glove. So you got to be, I think, embracing of the fact that this is your life and you get to choose what it's going to look like. Choose your own menu, choose your adventure. This is a Mad Lib situation. You get to fill in those blanks and be excited about it. Replace that one word with, excitement. Like if you're afraid of it, be excited and you'll train your subconscious to look for these opportunities where you might not have imagined before.
Well, I say you should probably put a 6-pack on your list. I put a keg on my list. I've already got it. So it's all good. I don't need the 6-pack. All right, Chris. Well, thank you so much for your thoughts today. We appreciate you as always. Look forward to a great 2026 and a good blank page. Thank you for coming on board, my friend. As always, it's great to talk with you.
Happy New Year, Michael.
Okay. Thank you, my friend. Appreciate you. All right, folks, we got more coming up tomorrow. In the morning, we're talking about the Homer Farmers Market and maybe some other things. Working on maybe a new legislator or two. We'll see what we can come up with. The Michael Duke Show. Common Sense Radio. We'll see you then. Have a great day. Be kind. Love one another. Live well. Okay. Well, my friends, that do it for me. That does it for me. We are out of time for today. I hope it made some sense today. I'd love to talk more about this. Maybe you should see if Ben Carpenter's still in the chat room. Maybe Ben, we should come on. Maybe you should come on tomorrow and we could talk about the solutions for the Republican Party. I know I'm tearing them down. I know that I'm being a little negative, but I'm trying to point out the problems and hoping that people who are inside the party can come up with some solutions, because I'm just on the outside looking in, like that kid with his nose stuck to the glass. Right? That's me. All right. Well, we're going to get out of here. We'll see you guys tomorrow.
We've shed our terrestrial radio skin, and now we are slimy lizard internet people. It's the Michael Duke Show.